Happy 5 Minute Friday from Dr. Holly, your chiropractic Profit First coach. Today, I am giving you examples of Profit First. So, I have brought over some of my real life numbers from Profit First assessments that I have done with clients, and sort of peeling back, the curtain a little bit on how we even start Profit First, how I run an assessment. And I'm a very visual person, so I always prepare these presentations for my clients and give it to them so they really understand what's going on in their business and with their numbers. I had an interesting question this week on a discovery call. This person asked, how do you have some sort of assessment that says, if I'm right for doing coaching with you? And I thought, well, that is a really great question. Nobody's ever asked me that. I run assessments on how profitable your business is, what is the health of and the sustainability of your business model, essentially, through doing a profit first assessment. But if you're already really clear on what your numbers look like, and how you're managing your cash is just fine, you're kind of looking at getting to that next stage. Is profit first really the direction you want to go? And that's a really great question. Listen, I have worked with clients on many different stages of their business. Okay. The profit first model works really for any revenue generation number that you're at. We have certain brackets that tell us, if you're collecting anywhere up to $250,000 a year, here's what your ideal brackets should be, or your ideal percentages should be for how you manage your cash. Okay. And that's taking your profit first, paying yourself, saving for taxes, and then obviously paying your overhead. But it grows from there. We have a bracket for 250,000 to $500,000. We have a bracket from $500,000 to 1 million. We have a bracket from 1 million to 5 million. And yes, there are businesses I have consulted on that are in those brackets, and we are working towards those goals. Does it mean it's a perfect system? Absolutely not. Sometimes we reach an ideal and we say, hey, we can put a pin in it. This is done. This is good. But we all know that business is ever evolving, right? And it's never really an easy day in business. There's always curveballs that life likes to throw at us. And so Profit First just gives you a system to know, have clarity in your numbers, understand how to manage them. And then, if there's bumps in the road, we have a safety net for that. Okay. So let's give you some numbers. All about the visuals here. So let's look at some numbers. These are real numbers from clients. When I run a profit first assessment with clients, what I have them do is I have them send me, reports from their CPA or from their bookkeeper that show me their profit and loss statement, black and white, all written out. What does the business look like on paper? And then we obviously interview and talk, and I really try to assess what is the day-to-day management of the cash flow in your business, and then where are your goals? Where do you really want to be? Okay, how often do you pay yourself now versus how often you want to pay yourself in the future, or how much you want to pay yourself, right? Okay, so looking at these numbers, like I told you a second ago, we do have brackets and ideal percentages that we want to try to work your business towards. Okay, so for this example, these are the percentages, the ideal percentages that we would want to get a client to if they're generating up to $250,000 a year in their business. Okay, so this business in particular generated $182,000 last year, 2021. And their expenses totaled up to $123,000. Okay. And then I interviewed them on how much of that they actually paid themselves, and then how much they needed to set aside for taxes, at the end of the year, or their estimated quarterly payments. Okay. So these are the rough percentages we came up with here: owner's pay, tax, operating expenses. Now, if you've been here for a little while, Profit First is based off of 5 foundational accounts that we open up. The first one is always just your revenue. It's your incoming account where all the money goes. The other 4 are your outgoing accounts. So we have profit, owner's pay, tax, and operating expenses. Okay. So in this example, we're only seeing 3, right? There's no set aside profit in this business. This business is running right up against all the money that came in, really went right back out, right? Okay. Or went to the owner, but still, that's not a big chunk of the pie there. So where do I start this client? Okay. We always start with 1% of profit. Okay. Because we don't want to rip that Band-Aid off too quickly, right? We just have to get in the habit. We have to make the process and the system work for us. And that means we're just literally shaving off a little piece at a time, and setting it aside until we really get in the rhythm of having that that structure down there. Okay. So 1% of profit. I decided to bump this person to 15% owner's pay. And then we always set aside 5% for tax. Okay. I don't care if you've never had a tax bill. Okay. I want you to start at 5% for tax. Okay. Because we know this process, hopefully, is going to make your business, it always has, make your business more profitable. Okay. So you need to be planning for, even if you're not at the goal is 15%. You need to set aside that 5%. And I talked about this, I think it was last week or the week before, on actual tax day is, if you have state income taxes, if you're federal income taxes, hey, I at least want you to be able to pay your CPA to properly prepare your taxes. Okay. That's what that 5% is for. So we're starting this person on 79% operating expenses. And then this is the ultimate goal. Listen, it can take you up to 18 months to get to that point. And maybe we never actually get to that point. And I don't mean that to mean a bad thing, is that we can work this system and we can have a workflow going for you if you never get to the quote textbook percentages. Okay. Just being real, just being honest with you guys. All right. I'm over 5 minutes. I still have one more example for you. So hang in here for just a second. Okay. So this one is that next bracket up. This was a business that was generating just under $400,000 for last year. Their expenses were $270,000. And they paid themselves. They actually did have a profit. Okay. But look what I did here. I actually went down on their profit percentage. So this was their profit, like on paper at the end of the year, didn't really have any intention to it. Okay. They weren't bonusing themselves. This was the year 2021. So they're probably just holding on to cash in case of emergency, etc. So I actually lowered it here to bring it back down to 5%. And oh, am I covering that? Okay. Their operating expenses were at 68%. I actually bumped those up to 70%. Again, this is all customized based on where you're at in your business, what's coming up in the next quarter or two that we need to make sure that is going to be funded. Okay. We don't want to set this up just to constantly steal on the back end from your other accounts just to make payroll happen or make the cash flow happen, etc. Okay. Tax, bump that. I told you minimum, always 5. And then owner's pay, we went up to 20. I don't know, just make it a nice even number. Okay. That wasn't really the intention there, but you're seeing the picture here. You're seeing, okay, now we have these bank accounts open. A majority of my clients are going from 2 bank accounts to 5 bank accounts. That feels overwhelming to them, but it's all about the intention and the structure behind that. So we just start to manage our cash flow and see it in this different way before we make major changes. So just for reference, for this bracket where we're trying to get this business to is 35% owner's pay, again, 15% for tax, 10% for profit, and then the remaining 40% is for operating expenses, okay? And this rent and the staff, that's not my textbook. That's just an example, just a visual that I put out there for my clients. So, all right, wrapping up. It was 7 Minute Friday. Have a good weekend, everybody.